Hello everyone. Today we're going to have a brief market recap, then discuss the UK borrowing data coming out this morning. This is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you my European opening market comment. The euro is lower in Europe this morning following yesterday's ECB meeting. ECB President Draghi said that quantitative easing won't come to an abrupt end and they will preserve accommodation. That suggests they're likely to extend the program in March and then taper off, which is negative for the currency. The dollar, on the other hand, is generally firmer on yesterday's better-than-expected Philly Fed index and better-than-expected existing home sales. Now, China's renminbi continues to fall as the People's Bank of China lowers the fixing further. The move signals that China is willing to tolerate a weaker currency to offset falling exports. You can see the long-term connection between the two here in this graph, where the blue line is China's exports and the yellow line is the currency. Oil's lower this morning after the CEO of Russia's Rosneft said the country has the capacity to boost output by an enormous 4 million barrels a day. Also, Nigeria cut its official selling prices. And the Canadian dollar is lower on the fall in the oil price and the problems that have cropped up in approving the trade agreement between Canada and the EU. As for today, it's shaping up to be another quiet day during the European morning. The UK public sector net borrowing requirement may attract more attention than usual as the market tries to get a handle on UK fiscal policy. As you can see in the graph, a narrower budget deficit tends to go along with a stronger pound. But this may be confusing correlation with causation. It may be that the deficit narrows when the economy is doing better. And when the economy is doing better, interest rates tend to be higher. Now, with the autumn statement coming up in about a month, a fall in the amount of borrowing now may make room for more borrowing later. That could be positive for the pound, as it would mean less need to rely on low interest rates to keep the economy going during Brexit. For an update on the U.S. indicators coming out today, please watch my North American opening market comment. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.